You're watching Worldwide Exchange from Europe, Asia, and the United States.
Right now, and of course those numbers continue to get steeper into the red this morning. Now, joining us now is Emily Sanders, CEO of Sanders Financial Management, and still with us, of course, our guest host, Steve Forbes, chairman of Forbes Media. Emily, if I can start with you, it's a tough climate right now to be investing money and managing money for clients, and you're a bear on the stock market. So if you're not bullish on stocks, then where do you put your money right now?
Good morning, Jackie. We really like preferred stocks right now and quality dividend-paying equities that have a great balance sheet. We're also pretty heavy in cash, about 20% of the portfolio for the clients. And we see that as an asset preservation move, really, in this area of uncertainty and skittishness all around the world. Fears of contagion. The German Bund auction this morning is just, another sign of fear, perhaps irrational. Chinese PMI this morning, also showing that the world's growth engine may be sputtering. So there aren't a lot of places to hide, and our main goal is capital preservation for our clients.
Emily, let's pick up on that German bond auction. The debt agency in Germany says it reflects a highly nervous market environment. What are the implications as far as you're concerned?
The implications are to continue to be cautious and to really look carefully before investing clients' assets. We're very much in favor of quick hits, which would be just short-term plays on market movements, since the market has been so volatile, but really anchoring the portfolio with good quality names and also very high dividend payers. Not so high that the dividend isn't sustainable, but just high enough to churn out, let's say, about a 3 or 4% yield that provides a floor in the market when things get really choppy.
Steve, the debt agency in Germany says this auction result doesn't mean there'll be a refinancing bottleneck for the German budget, but I'm wondering whether it really will make German politicians really, if nothing else concentrates their minds, the fact that they technically are getting failed auctions here won't it?
I think that's going to happen, and something's got to get the chancellor to realize stern measures have to be taken, quick measures have to be taken, and that means whether they do it through the IMF, pulling a rabbit out of its hat in terms of financing for countries, but more likely the ECB just going in and literally buying, making it clear it'll buy hundreds of billions of dollars of euro bonds, bonds of Spain and Italy to stop this contagion, because it's going to, as we see this morning, it's hitting Germany. And the amazing thing is, in the U.S., I think the economy is a little stronger than people give it credit for. And you can see it in our equity markets. The equity markets want to go up, but it just keeps being hammered by bad news from overseas. But this market, I think, is cheap and is just waiting to surge once they see any sign that Europe's going to get its act together and deal with this short-term crisis.
You bring up a really good point about the strength of the markets here, showing some signs of being a little bit more positive. Emily, I want to get your take on this. A lot of people looking to the consumer and retail towards the end of the year to help boost things in the United States. Do you see that trend as a valid trend, and are there any sort of sector-wide trends that you would recommend to your investors?
Yes, well, if the traffic in parking lots at shopping malls are any indicator, the consumer in the U.S. is still alive and well. And according to our estimation, 80% of U.S. equities are currently undervalued, to echo Steve's point. So there are some sectors that we like. Consumer at the moment, is actually doing pretty well, particularly some specialty retail. And we do see tech as undervalued. And we also like healthcare for the long-term demographics, and they have some pretty good dividend yielders. But when you scan around the world, even with our revision of GDP yesterday for third quarter, being 2%, it's still really not bad in the scheme of things of the world. So we're not in that double-dip recession yet, and we hope not to follow some of the other countries that already are in a double-dip recession.
All right, Emily, we'll leave it there on a bright note. Emily Sanders, CEO of Sanders Financial Management. Of course, still with us, Steve Forbes, for the rest of the hour. Now, up next on Worldwide